We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the Cash Flow Pro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to today's episode of Cash Flow Pro, your daily real estate investing podcast and YouTube channel. I am here today with Brian Adams, and I've got to make sure I say this right, of Excelsior Capital. I get that right?
You nailed it.
Good.
Crushed it. Perfect.
We actually are geographically only about an hour apart, which is very interesting because I get several people on here. We were just talking about the Nashville connection that seems to be with real estate investing. And it's kind of a hotbed of capital raisers and just a lot of stuff going on in Nashville, projects in Nashville, and I've also had several guests on here from Nashville. So, Brian, how are you today, sir?
I'm great, man. Thank you so much for having me. I really appreciate it.
Absolutely. We're always interested in people's stories and how they got where they are and what we can do to, and possibly what the listeners can do to emulate what you've done in order to get their business off and running. Or maybe there's somebody out there that says, hey, man, I really want to be in whatever markets we discuss with that guy. So there's all those folks out there. We want to connect with them. But first off, we want to hear about you, Brian, where you come from, what your background holds, and then what it looked like as you kind of started realizing that, man, this real estate investing thing may be for me.
Yeah, happy to do it. So from upstate New York originally, small place. I went to a small all-boys military school up there, went to college in Connecticut, and that's where I met my wife. So she's from Nashville. Like you mentioned, she's a native, which is a rare thing these days around here. Yeah, she's a unicorn.
She remembers those days that I remember when we would go to Nashville, and it was just like, if you talked about Nashville outside of Nashville, people would just like, you're from a hick town, or it's just, go ahead. Sorry.
No, you're right. I mean, she's got stories about how, there was nothing going on. Downtown was actually a super sketchy place, right? Second Ave and Broadway. There were peep shows and strip clubs, and just was not a
Alley.
Yeah, Printer's Alley had, the brass stables and all that stuff. And we can get into it, but I was at an event last night with this wealth management firm, this huge global wealth management firm that has opened an office in Nashville. And we were at the 1230 Club, private area that Justin Timberlake owns. David Robinson is there. I mean, it's just like there's so much going on in Nashville. There's all this energy. It's wild to think how far it's come. I've been here 15 years, but for my wife, last 20, 30 years, it's almost incomprehensible.
Yeah. I mean, I remember us taking a family trip to Opryland, and a lot of people, of course, look at it now. It's Opry Mills,
Shopryland, as we call it locally.
Yeah, and Opryland was a theme park, and they had the big log ride and all that mess, and it's hard to believe that. Yeah, I mean, when you and I'll be honest with you, when we used to go to the Titans games, there was some areas that you could really get down into, not far from the stadium. I'm talking about like a half mile at most. And there were some areas you get down in there, and I've mentioned this before, but there was a movie when I was a kid called Adventures in Babysitting, and they had these car chop shops, and that's what it always seemed like. That I mean, it was not a decent area to go, and now you drive down through there, and there's like boutique apartment complexes. They've turned these warehouses into apartment complexes, and some have been tore down, but I mean, some of them are the original, architecture that was there, and it's just absolutely, to me, unbelievable.
Yeah, it's interesting that the guys last night at this event, they were all in from out of town. I mean, there was somebody from Hong Kong, New York, Baltimore, London. It's a global wealth management firm, 120 billion assets under management or something. And they asked me, why Nashville had become what it had become. And I pointed across the street and I said, the mayors in the 90s who just got crushed for bringing the Titans to town because they thought it was expensive. The public thought it was expensive. And then they built the rink spec without a tenant. And they eventually got the Predators.
Yep.
Having an NFL and an NHL franchise
Yep.
checked the box for corporate relocations and made us a legitimate place for people to come.
Yep.
And that was, I mean, obviously healthcare and everything that's happened there, no state income tax, et cetera. But that was in '98. Both those franchises came to town. And that was the total, I think, catalyst, in my opinion, to start what has become just an unbelievable growth phase.
Oh, 100%. And I think there's and we run into that a lot in the capital raising space where, you know, capital raisers and real estate investors never look at the capital expense. Let me take that back. They don't not look at the capital expense. The capital expense is basically used to figure what the return on that expense is. And a lot of times we run into that where people are like, "Oh my, $100,000 minimum investment." Well, listen, you're not losing your $100,000. It's not costing you $100,000. You're only investing your $100,000 so that you can get a return, and then eventually you get it back. And so it's the same way when those just exactly what you said. People want, everybody wants growth until it comes time to spend money to get growth, and then they
Yeah.
lose their damn minds.
And I travel a lot in the Southeast, and I go to a lot of secondary, tertiary markets. And Louisville, not
Yeah,
too far from you, 20 years ago, much bigger population wise than Nashville. 50 years ago, it was I think it was a top 10 market
yeah,
in the country, MSA wise. And you look at Louisville, you look at Birmingham, you look at Memphis, and the demographics are just really tough right now.
yep,
And they had the opportunity, right? And
yep,
for various reasons, they didn't take advantage of it. And I tell my local friends who are complaining about traffic and whatever costs,
yep.
I said, you'd rather have these problems. There are cities that will kill for these
That's right.
problems.
That's
We
right.
need to be thoughtful about it, but
I
like,
think at this point, Nashville is to the point, and even in the surrounding area, it's to the point where it's time to they're going to have to invest in a considerable infrastructure upgrade. Uh,
well, I read this morning in Axios Nashville, this newsletter, that the hottest new residential market for Nashville is Franklin, Kentucky.
oh yes, I guarantee because it's right there. Listen, there's from a real estate investment standpoint, there is almost this seemingly triangle of car battery a manufacturer area, if you will, that kind of is Cincinnati to Nashville to Chattanooga and there's a triangle right there, and Franklin is square in the middle of it because of its relative location to Bowling Green. Bowling Green has a fabulous educated workforce that is, and so I think that all of that being said, that's from a real estate investment standpoint. That's why those areas are so hot right now.
Yeah, yeah, absolutely. It's I know we got way off track early, but yeah, it's
Yeah,
wild.
it's
It's
fine. It's all good, man.
we would roll
So,
with it. Okay.
yeah, let's talk a little bit about you. So you moved to Nashville and
Yeah.
witnessed
So
this.
met,
Go ahead.
yeah, met my wife in college. We did the Northeast thing for a little bit. We lived in DC. Then we both went to grad school in Boston. I'm an attorney by trade. Moved here about 15 years ago. My wife wanted to come back home, like every Nashville girl ever, and did that. And my wife's family has a single family office here. So when I joined the board and got exposure to the investments we were making with other GPs, other sponsors, other fund managers, I didn't know what private equity was,
Yeah,
honestly. Um, and I didn't really understand private investments or alternatives. And so that was really my teaching course, was through my father-in-law and our CIO and all these connections and relationships that they had
yep,
existing. So super fortunate. And that's how I got into the business originally, was to source deals for the family. It then became friends and family. I then grew really fast. I almost blew myself up. We can get into the mistakes I made. And now I've kind of done a second iteration of the firm last 4 years, and it's been really fun.
Yeah. Oh man, that's great. Yes, let's definitely hit on a few of those mistakes, because I know and again, hit on the mistakes with the perceived outcome that, hey, I learned from these, and this is where it took me, is where obviously where you're at today, and then we'll go forward from there.
Yeah, so just to kind of give people perspective, this is not a boasting comment because there's always somebody with a bigger plane, but we're running about 500 million gross assets under management today.
Wow, man, that's ooh,
So let's rewind the tape. I got into the business, um, and this is about capital raising. Uh, I know the focus of the show. So what I initially did was I would do 5 meetings a day, 10 phone calls a day, every day, and I wouldn't leave the office on Friday until I had those meetings teed up and knew who I was going to call. And I did that for a while, and it was true ground and pound, and it did work to some extent. But what I found was when I flipped the script, and instead of just trying to cram product down people's throats
yep,
through kind of brute force, I did kind of a mini roadshow where I talked to a number of our biggest investors or biggest potential investors, people that I wanted to convert. And I really sat down and listened to them and asked them what they wanted.
yeah, yeah,
Everything. Like, how would you want to be pitched? What would you want to be included in the email? Would you want a follow up call? How much would you allocate? What are your pain points that you're trying to solve? How would you want the structure? How would you want the everything, right?
yeah,
And so at a certain point, I pivoted and I started just providing a product that solved their problems, a
yep,
solution set to their issues.
yep,
And that's when we started really growing. So before we were raising funds, these blind pool commingled fund vehicles, it was really hard. And then we started offering up just direct co-investment, pure syndication.
yep. On
Initially,
single assets.
yeah,
Okay.
exactly. And that's when we grew to about 250 million AUM initially, probably in the course of 2 or 3 years. Um, so just super fast. And so mistake one was having the ego pitch where it was like, I know what I'm doing. I'm really smart. I found this great deal. You need to do it. Jam, jam, jam. Once I pivoted to more of an empathetic approach to sales, it became much easier.
Yep.
Second one was definitely that I fell into a trap that many sponsors do of becoming a deal guy,
Mm,
where I was just focused on making the acquisitions. We're just growing. I wanted AUM. I wanted square footage. I wanted that to kind of feed my self image. And at some point, the lack of investor relations, reporting, transparency, communication just grew too big, and the wheels started to fall off there.
yep,
And so I had to go back and kind of fix everything. I didn't realize initially that even though I'm in the real estate business, it's really a small business, right? You're an entrepreneur. And
yep,
so you're running two risk profiles. The one risk profile is the deals, right? The deals have to work, they have to make sense. You've got to get the real estate dirt stuff right, bricks
yeah,
and sticks. But then you also got to figure out how to be a small business owner.
yeah. That's a
And I think it's like 89% of small businesses in America fail within the first 3 years. So you've got to get that right too. And I think a lot of people put that on the back burner. They don't appreciate the fact that you've got to put time and resources into it as well.
yeah, and I've also exactly what you said. One of the very first things that you said leading into this was you sat down with the investors and asked them what they wanted. And I think from a small business standpoint, whether you're selling widgets or whether you're selling billion-dollar buildings, if you're not solving those problems, you're going to fail. If you're not focused and listen to your customer and say, "Hey, what do you want?" You're going to fail. And it, that's to me one of the most important things you said through that whole thing on the mistakes that you made, or leading into the mistakes that you made, was that you had done that. And then, and I think a lot of capital raisers, I think people so for instance, we're a fund of funds, and exactly what you said, when you have those blind funds and you want to accumulate a growth of investors, they want individual deals. They want individual deals that they can go out, see, touch, get accounting on, think about, look for ways to specifically improve those single assets, rather than saying, "Hey, here's $100,000, do with it what you please." And it makes sense. So listening to your customers, I guess, is really what I wanted to say out of that. Everything you said, I can't imagine there being any single one thing you're going to say moving forward that's any more important than that.
Yeah, I mean, you know, I think really understanding you've got to get your ideal customer profile right. You've got to get your avatar right.
Yep.
And I think a lot of people who are getting to the capital raising game initially, they're so scattered and shotgunning it between unaccredited investors, accredited investors, qualified purchasers, institutional groups,
Yep.
friends and family. Like they're all over the place,
Yep. That
and
avatar
you
piece.
can't service that many clients,
Yep.
right? When you're starting out, and so you've really got to get who you're who you're trying to
Well,
target.
when I was defining my avatar, for instance, I started, okay, 40 to 50-year old, okay, and then I started saying, okay, and I want him to be an engineer. And when I said that, I was like, engineer. Then I was like, okay. Well, if I only focus on the engineers, then what about the doctors? Well, if I only focus on the doctors, what about the accountants? And then all of a sudden, before you know it, I was standing on two skateboards, the equivalent of standing on two skateboards, trying to balance while not being able to focus on anything. I'm focusing on everything, and it's not. And the avatar definement, yes. So I had a lady on my podcast the other day who actually has a name. She named her avatar. I
Mm.
can't even remember his name, but anyway, he had a name. He had a wife. She had his wife's name. She had his age. She had, and the specificity of that is what really, I think, people miss. And I was the same way. So and I'm sure you were as well. We're all getting that definement and figuring out that, hey, we don't need to focus on everything. We need to focus on one thing. The other things will take care of themselves. So what I did was I went down one level. I was like, okay, doctor, engineer, accountant. What do those three have in common? Processes, process driven individuals. So rather than defining them as based on a a career path, I defined them based on what they did. So go ahead. I'm sorry.
No, no. I mean, we're just riffing here. I think that's right. Um, I see a lot of people that come out of the gate and they've got $100 million ground up multifamily development deal, and they need to raise 40 million bucks on it, $50 million, and they take it to market. It could be the best deal in the world. I think the biggest fallacy in the business is that you'll raise on a good deal,
Yeah.
and this is simply not true. You need to have a system, you need to have a process, you need to have a marketing campaign, you need to have a pre-sale. Like, you need to take your sales effort seriously, and don't be afraid to talk about it openly with your LPs. I think a lot of people don't want to be considered sales folks, but the fact that you have a robust sales process and capital raising process is what allows people to have lower minimums, more access, more
Yep.
deal flow. And that's a question to kind of go on the other side of the table. When LPs ask, well, what should we be asking? The deals are going to be the deals, right? I mean, you can look at the underwriting, you can look at the comp set, you can do a tour. We all hope they work,
Yep.
right?
Yep.
The questions you really should be asking, in my opinion, are okay, what is your what does the GP sponsor's infrastructure look like? What does their accounting look like? Their bookkeeping, their acquisitions, their asset management, their capital raising, their investor relations, their marketing. Are they providing value to their LPs beyond just these deals? Because I think that investor experience and that investor journey is really going to dictate much more than the deals themselves in many
Sure.
ways.
Sure. Yeah, absolutely. And then so I want to back up a little bit, because in my opinion there's almost a very defined, well, no, that's not even my opinion, it's fact. There's a defined line between retail investment money and institutional investment money. Now I'd like for you real quick, which one of those do you focus on? Or I know, and it's not all created equal. It's by far not created equal. But are you focusing on institutional investment money or retail investment money?
Yeah. So we have in the past worked with institutional folks.
Okay.
We no longer do.
Yep.
Um, and so to help people define this, the way I think about institutional money is non-taxable.
Yep.
So pension plans, endowments, big foundations, some insurance companies. Those are great limited partners for certain people, right? But yeah, we very purposefully do not work with institutions. So we don't work with private equity. We don't work with allocator funds. We don't do JV deals.
Yep.
We only work with accredited investors.
Yeah. And there again, there's a fine line. The institutional stuff typically wants more control and you lose. And by the time you start piling layers on, and if you were to mix the money, retail and institutional money, then you get some retail folks that are caught up with somebody else that wants control that could easily sue everybody involved. And it's just, yeah. So 100% in agreement with everything you just said.
Yeah, I mean, I talk to a lot of emerging sponsors that think that if they could just raise a $250 million blind pool fund
Yeah.
with institutional capital, they'd have the world solved. It would be the key to their problems, and it's just simply not true.
They would end up being a part of somebody else's process.
Right. I mean, to your point, that those folks, I went to school with a bunch of them. They're super smart,
Yep.
very well capitalized,
Yep.
and as we'd say in New York, have sharp elbows, right? So they'll rip your face off for $1.
Dang right they will. And
And it's just it's, and
if you think they're gonna go for some 1.5% management fee, you better get your mind right.
yeah, they're going to beat you up pretty hard. Yeah.
1/1000%.
Yeah, they're going to beat you up pretty hard. And also, something that I don't think people appreciate is if you're that institutional LP or that allocated fund or private equity group,
Yeah.
you not only have zero incentive, you have incentive to make sure that that sponsor that you're working with, the operator, never has the ability to raise real discretionary capital themselves, because then you're just competition for them.
That's right.
So everything they do from a structure standpoint and a control standpoint is to prevent you from ever being able to raise true discretionary capital. It's a very
Correct.
challenging game to get into, and there's some great operators that have a really good business around it. But this is also an important conversation to have. Is kind of like what happened to me early in my career. You can fall into this trap of really worrying about square footage and AUM. What you really need to be focused on is whether your GP business makes any sense.
Yeah. Yep.
Like that's how you need to be thinking about your business, is from a GP perspective. Is what I'm doing makes sense for me and my family and my company?
Yep.
And forget about the rest of it, because the ego metrics, it's a loser game and it's a waste of time.
Yeah. Ego metrics. I like that. And it's so real. And there's anyway, we could talk about that all day long. The discretion, the how you need to set your business up, and a lot of that stuff is learned in the very beginning. And I was the same way. I know a very very reputable broker in Chicago who handles quite a bit of that money, but he does it on the commodities markets. And so I called him up, and I almost immediately, I was like, "Ooh, whoa, 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 whoa!" He and I are friends, and we're going to remain that way. But I'm not. This is not going to happen because again, it's just there's too much tug and pull and too much bulls running into one another. And so, anyway, what is the landscape of your business right now? What are you all working on? Are you currently in any capital raises? What's happening with that?
Yeah, so I've got kind of two platforms. I've got my legacy company and then Excelsior, which is what we're talking about today. At
Sure.
Excelsior, we've got about 200 million AUM, roughly 10 people total, employee wise, in the company, including myself.
Awesome.
It's pretty interesting. I obviously learned a lot from the first iteration of the firm. We recapped that portfolio, and I tried to not repeat those same mistakes. So the first thing I did was hire a controller who's a CPA with a public accounting background,
Yep.
actually from Southern Illinois, so not too far from you all.
Yep.
Because that was a big mistake I made the first time, was trying to outsource it or third party it. Because we only work with accredited investors, you really need to be worried about net of fees after tax returns, and you're going to get a lot of tax related questions. So you need to have a tax professional in house, in my opinion.
Absolutely. I had a CPA on a couple days ago. So, I mean, just yes, there's
Game changer.
it's such a web.
Yeah, and
Every structure is that's what her and I talked about. Everybody wants to have a scalable something we can just lay a model across and it runs like that every time. And it's just when you're talking about tax stuff that it's virtually impossible.
yeah,
The only
yeah,
way to
it's
scale that is with people.
right. So we can't give tax advice, obviously, but
Mhm.
we interact with a lot of tax professionals, and people just trust their CPA more than anyone else in their life. I mean, they know everything, right?
Absolutely.
Often more times than the spouse. So anyway, that was the first one. The second one was having a best in breed investor relations software platform. So got Juniper Square teed up after we ran a process.
Yep.
Um, so we kind of were moving in the right direction. I got a marketing person to help us with content calendars and the website, and we were doing pretty good. And then COVID hit,
Yep.
and the debt markets froze up. Obviously, nothing was happening really. The world was falling apart, and so we had about a year
Yep.
to work on stuff that, because we were always running around, we didn't have time to. So we got really deep into digital marketing, content creation, leveraging social media, thinking about our marketing processes, and really mapping out that investor journey, right? Day one, when you enter into my ecosystem, all the way up until you invest into an opportunity, and what that looks like post investment on a daily, weekly, quarterly, annual basis, like what it looks and feels like. And so we did all this work, and then we turned the engine on January of last year, and we made 9 acquisitions last year, and we're not going to wait about to close our 5th this year. So
So
we've
you're
really got a
pulling
ton of
up to one a
momentum.
month.
Yeah.
You're moving up to one a month. I mean, man, that's are they all local? What's your geography look like?
No, unfortunately, we can't afford to
I
buy anything in
thought
Nashville.
that, but I thought maybe hopefully you had a in on a deal because I wanted in on it down there.
No, I wish.
Go ahead.
Hi, this is Casey Brown, host of the Cash Flow Pro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must-Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making Cash Flow Pro part of your day. Now, back to the show.
We're in predominantly Texas and Florida,
Okay.
but we own some things in Cincinnati, Minneapolis, Detroit, Richmond, Virginia. But lately, we've been focused on. We did Fort Lauderdale,
Okay.
Tallahassee, Fort Myers, Orlando, Dallas, El Paso. But we're kind of all over the place. That's why I like being a syndicator, is I can kind of go where I find opportunity,
Yeah.
and not
Definitely.
be kind of beholden to a PPM or a
Real
strict
real
geographic.
quick on because you're in so many markets, I feel like this is going to be an area of expertise for you that I think a lot of, especially beginning syndicators, have. I know I did. Is deal flow, finding, especially on the individual syndication level. Um, Now, I'm going to complicate this question. So, is there anything that you do outside of broker relationships in individual markets? So I'm not going to say how do you find deals in individual markets. I'm going to say how do you find deals in individual markets other than broker relationships, which is the go-to.
Uh, Centers of influence. I mean, a big misconception I think people have is when they join a firm like mine, they think they're on the buy side, that they're going to be a principal, blah, blah. The first thing I tell a potential hire is you're going to show up every day and be on the sell side,
Yep.
because we are selling ourselves to investors. We're constantly raising money, and
Yep.
we're selling ourselves to owners that we are a liquidity source for them.
Correct.
So if you want to roll around town thinking you're, some big shot buy side guy,
Yep.
take it somewhere else, because we are selling every day.
Yep.
And so
Yeah.
when
100%.
I go to when I try to go to one of the markets that we own these properties, and I try to go twice a year, depending, and it's nothing groundbreaking, but it's the attorneys, the CPAs, the centers of influence, the other sponsors or people that I know, and just pound the pavement and making sure that we're talking to every broker, talking to every owner that we can, putting ourselves out there. One of the things that I did was, we have two acquisitions guys, and I made sure they both went to SEC schools and can talk football and basketball, because
Absolutely.
most leasing brokers are fraternity guys from SEC schools,
Yep.
and you got to get to that initial 10-minute conversation
Yep.
about what's happening in the SEC or Big 10, Big 12 before you get into the next, let's talk about a deal.
Yep.
And so, I try to have them do 25 calls a day,
Oh, wow.
inbounding to brokers.
Yep. Yep. Knock it out. And that's the other part, man. Those acquisitions guys, they have to have multiple personalities, which is easy for some people, but you have to be able to um, making cold calls is sounds awesome and it sounds fun and it sounds whatever, or maybe it doesn't. Some people don't enjoy it at all. But like my wife, she was like, I'm ready to take the next step in her real estate career. She's in the sales side, and I said, all right, you're gonna have to start cold calling. Well, the first day she sits down, and it's like she sat there. She had the phone app pulled up on her iPhone, and she just was just staring at it. And I'm like, just push the buttons and call. She just it was a massive it might as well have been, she might as well have had her phone sitting 1,000 miles away from her, and no, she had to walk to get to it. It was, and I've never seen anything like that. But I guess that's a real thing. So yeah, your acquisitions guys, they've got to be a special type. So
Yeah, never met a stranger, overwhelmed with phone calls and emails. Like, that's what you want them. You want them running hard, right?
absolutely.
And I take them, when we go to these markets, taking the leasing broker or your property manager or the investment sales team, whoever was involved with the transaction, taking them to dinner, buying them drinks,
Yep.
asking them to include all the team members, bringing them some corporate swag,
Yep.
goes a long way, because these people have ADHD to the max, right?
Yep.
So unless you're top of mind, unless you're the most recent touch, they might call somebody else. You
Yeah,
just need to make sure
absolutely.
that you're the first
And you
call.
said that's been my go-to since the day I stepped into the real estate business. Same with individual sales. You have to be the last person. You have to be the last real estate agent to talk to that person. I don't care if it's your own mother. You
Mm-hmm.
have to be the last real estate agent that talked to that person. Otherwise, and it's the same with this business. I mean, it's the same as, it's all the way across the board. ADHD to the max. You have to be the last one they talk to. If you're the last person they talk to and they know you're a liquidity source, boom, there you go. You bought them dinner, you bought them drinks, you bought them something that they can remember you by.
Mm-hmm.
So, anyhow, all right. So, listen, there's a couple of questions that I ask every guest that comes on, and there's no right or wrong answer. We want your most honest answer, because I feel like a lot of people follow what we say. Now, and there's the two topics are reading and travel, and reading and travel are so very important to career enhancement, I guess, if you will, because you can enhance your life through reading and learning from others' experiences, like we do here, and you can also take a break, chill out, enjoy, smell the flowers with travel. So, what is the best book that you have recently read, or it could even be not even doesn't even have to be recently? What's the best book you've ever read?
Well, best book I've ever read is a pretty big question. I'm a huge Hemingway fan, so The
Okay.
Sun Also Rises is usually my go-to. I'll give you a recent one that I got turned on to is Station 11. They have the HBO show now,
Okay.
but it's this novel, post-apocalyptic, but it's not as dark as you think. So
Okay.
Station 11, check it out. Good book.
Station 11. Awesome, man. That's great. What is the best trip you've ever taken or hope to take?
Oh man, so I love skiing. I'm a
Okay.
huge skier, and COVID convinced me I need to start banging out some of my bucket list mountains. So I did a guy's trip to Whitefish, Montana,
Oh
northwestern
man.
Montana, Glacier National Park, and it was unbelievable. It was the coolest ski trip I've ever taken in my life, and it was a beautiful place. So
Oh man, yeah. I don't think people in the United States really understand what we have simply in the state of Montana alone. Whether you're
mhm.
in Billings or whether you're in Glacier National Park,
Yeah, fishing, hiking, skiing is
it's
incredible.
it's
Yeah.
just
Hunting, yeah.
beautiful. They have the best cattle genetics there is anywhere in the world, too. I'll put them up against anybody. So, all right. So, if the listeners heard something, they want to reach out to you potentially. If you ever need a hire, or if somebody's looking to invest, or somebody's looking to even just talk real estate, what is the best way for the listeners to reach out and get with you?
Yeah, I appreciate that. Probably LinkedIn. I'm super active on there. So
Okay.
just look up Brian C. Adams, Excelsior Capital. Shoot me a note. I'm happy to set up a call with you or help. And if you're in Nashville, give me a buzz and we can grab coffee or lunch. Yeah, there's a lot going on here. But
Yeah.
I appreciate you having me on the show. Thank you so much.
100%, brother. We're always glad to provide exposure for folks that are in this business and in this space, because I know that's how all of us, when you're in a local real estate market like we are here in Hopkinsville, everybody is like they have that sneer. They put their arm around you. They sneer at you like, "Hey, I'm acting nice, but I'm not really your friend." This business right here, we're so spread out. I think we all try to give and give back, same as you coming on here to enhance our listeners' lives. So, Brian, thank you so much for taking the time to be with us today.
Yeah, man. I appreciate the opportunity. Thank you.
Absolutely. Hope everybody has a wonderful rest of the day.
Cashflow Pro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.